Hello everyone, welcome to our webinar on land-based emissions. We get started in 2 minutes. In the meantime, feel free to quickly introduce yourself in the chat, your name, the company you're working for, and where you're based. And then we get started in 2 minutes. Right, I propose we get started. We have a busy agenda for today, so we want to make sure we wrap up in 1 hour. So let's get started. Thanks a lot to all of you for joining on our webinar today on land-based emissions. In carbon accounting, FLAG&LSRG. So I brought 2 people who will explain you all about what those words mean. My name is Kenneth. I'm CEO of Carbon+Alt+Delete and also one of the co-founders of Carbon+Alt+Delete. Maybe one word on Carbon+Alt+Delete. We are a carbon accounting software provider. So we are a software provider, and our software is exclusively being used by sustainability consultants across Europe to help clients to track and reduce their carbon emissions. And today I brought 2 other people who will do the heavy lifting. Steven, one of our carbon experts, and Sasha, a senior consultant at Climate, a user of Carbon+Alt+Delete, but also an expert in FLAG. Steven, you want to quickly introduce yourself?
Yes. Hi everybody, I'm Steven. I'm carbon expert at Carbon+Alt+Delete, basically meaning that I'm tackling all methodological aspects of our tool and with a background in bioscience and agriculture, and thus also the expert on FLAG and LSRG.
Thank you. Sasha, you want to say a couple of words about yourself and maybe also about Climate?
Thank you, Kenneth, for the introduction. Thank you for having me today. Sure, so Sasha Breyer from Climax. I'm a senior consultant and at Climax, we basically support our clients, companies, private companies, but also public authorities towards decarbonizing the society. And we are specifically expert in science-based target initiative, and we support a lot of companies in the different sectors, also with topics related with land, agriculture, and forest emissions.
Thank you, Sasha. Thank you, Steven. Thanks a lot for both of you to making time to do this webinar. Steven, maybe on the next slide, some housekeeping rules. So we're very happy with the big audience. The consequence of that, of course, is that we muted you by default and your camera is switched off by default. Apologies for that. Don't take it personally. But I strongly invite you to interact through the Q&A. So through the chat. So there is a chat. I've seen already a lot of people introduce themselves, so also feel free to do so. And also through the webinar, if you have a question, if you have a remark, feel free to put it there. We have some time towards the end of the webinar to take the most common questions, so you can also give each other's questions a like. Maybe already one typical question that I can answer. We are recording the webinar, and we will share both the recordings and the slides with everyone who registered for the webinar. So you can take notes, but we will share the slides with each one of you. Maybe on the next slide, Steven, on the agenda of today, So I will just take a couple of minutes to set the scene and give an overall introduction to land-based emissions. Then Stephen will zoom in on how to do the carbon accounting of them. That's what LSRG stands for. And then Sasha will zoom in on target setting for land-based emissions. That's the flag of the science-based target. And as said, towards the end, we have 15 minutes for Q&A, and we will wrap up by 12 to be respectful of your time. I use you a bit as clicker now as Steven, so if you want to use to the next slide. Maybe just 2 words on what are land or land-based emissions. Basically, what we're talking here is everything except fossil-based emissions, right? The classical way of thinking about emissions is that it comes from burning fossil fuels in one way or another, directly or indirectly through embedded emissions. But besides that, you also have emissions that are not directly coming from fossil fuels. If you like acronyms, if you like letter soups, this is really a topic for you because you will see a lot of them passing by. So here on the slide, we mention AFOLU, which refers to emissions from agriculture, forest, and other land use. Typical example is agricultural sector. The example here on the slide, enteric emissions, is a scientific word for basically the methane farts from cows, right? Typical example. Another typical example is reforestation, deforestation, having an impact on carbon emissions or removals through trees. Next to AFULU, if you start looking into literature, you find other acronyms, but they're all referred to land use, forest, agriculture. Are they important? As you will see on the next slide, there is definitely a good reason to address them. So in the overall amount of anthropogenic greenhouse gases, they account for 22%, or about 13 gigatons CO2 equivalent per year. That was data in 2019, so there's always a bit of delay in the data. At the same time, it's still increasing. Not as fast as the fossil-based emissions, but it's still increasing. So on the right-hand figure, you see that the land-based emissions have increased around 30% over the last 30 years, basically because we're still all eating more meat and we're still cutting more forest. Putting it a bit simplistic, but that's basically why those emissions are still going up. So in order to become net zero, it's also important that we start to track those emissions and that we start to reduce those emissions. And that's exactly why 2 of the main initiatives globally are also looking at those emissions. So on the left, you have the Greenhouse Gas Protocol that explains how to account for them, so how to calculate, how to report on them. And that's summarized in the land sector and removal guidance, which is still in draft, but will be final early next year. And also the science-based targets has the guidance on forest, land, and agriculture, which explains what the ambitious target in line with the Paris Accord is on those land-based emissions. Strangely enough, FLAG was before LSRG. You would expect it the other way around in a more logical way, so to speak. But okay, that's how it happened. And that's also the 2 topics of today. Before I give the word to Stephen to dive into LSRG, we'd like to know a bit more on your experience, your knowledge of those topics. So if you go to menti.com, and if you use the code that you see here on the slide, or if you scan with your mobile phone the QR code, you will be directed to a small questionnaire. The first question is basically, do you have experience with the LSRG from the Greenhouse Gas Protocol and or the flag of the science-based targets? From no experience to highly experienced. So very good, it seems to work. So we see some first answers coming in. We'll give you a couple of seconds to get there and to answer. Can you maybe still show the previous slide, Steven? There, the code was on there. And then I'll also put it in the chat. Oh. Very good. Can you then show the results again, Steven?
Yeah.
Thank you. Okay, good. To be honest, this is a bit in line with what we expected. it's a rather new topic. It's a rather complex topic, and very few people have already done several of detailed LSRG or FLAG projects. Sasha is one of them, right? So we're very happy to have you here, Sasha. So pretty confident that you will be able to share some interesting insights to the people who are less familiar with it. The second question that we had, Steven, if you go to the second page on the Mentimeter, is with your current knowledge of LSRG and FLAG, what seems to be like the biggest challenge? And it's I can imagine all of those points are a challenge, but we force you to pick one. So it is about you're not sure yet, building your own knowledge, software tooling. Is it about managing data for the client, or is it about emission factors? Give you another couple of seconds to answer. Good. Answers are still coming in, but I think the trends are clear. So building knowledge and capacity, that's exactly why we do this webinar. So I hope we will be able to help a bit with that, but I also invite you to put more questions in the chat if some of them are not yet answered by the presentation. And the emission factors, that's also a point that we really see as a challenge. To make this work, we need good emission factors, and I think, Steven, you will also come back to that in your talk.
Yes, exactly.
With that, I'm happy to give you the floor, Steven, to dive into the details of LSRG.
Yes, thank you very much, Kenneth, for that introduction. Just a quick check. I'm still clearly hearable, Kenneth?
Yes, all good.
All right, perfect. So I will give you a first deep dive in the land emissions in carbon accounting, or basically indeed the land sector and removal guidance. Just to start with a quick timeline overview where to situate the LSRG. As you might know, it's already been a long time, more than 25 years ago, that the Greenhouse Gas Protocol Initiative was started. And first there was a corporate standard, the Scope 3 standard, the Scope 2 guidance, which most of you probably know by now already more in detail. And it took then quite long, basically, for the Greenhouse Gas Protocol to come up with the LSRG. And even only today, we still have to work with a draft, but the final version is to be expected early 2025. If I must summarize the LSRG, the LSRG is the land sector and removal guidance. It basically, as Kenneth already explains, it's the accounting guidance for how to deal with land emissions and removals in your corporate carbon footprint. Fundamentally, if I need to summarize it in one rule, the fundamental change is twofold in my opinion. First, it brings biogenic CO2 emissions in scope, which were in previous versions reported separately and out of scope, and optionally they are brought in scope and in some fluxes or some flows obligatory. And the second one is, and it's of course also a major change, is that they bring removals in scope. Whereas previously removals were said to be out of scope, not to be accounted for in the same balance as emissions. And now there is a right place, or a valid place in scope. What it does not cover, and that's very, very important, I think, also with the current setting and the current attention to offsets and all that has to do with carbon credits, it is not a guidance that covers offsets. So it's all about removals in your own supply chain and not compensating emissions with removals or avoided emissions outside your supply chain. It is a guidance, and that's already like a big difference with what Sasha will explain to you about FLAG. It is a guidance that applies to all reporting companies that use the Greenhouse Gas Protocol guidances. And it's up to the reporting company to state or to decide whether the emissions that fall under the land sector removal guidance are material and thus need to be accounted for. Today, I'm not that much going to focus on the ISO standard and the ISO coverage of land emissions and biogenic emissions, as I think they are much more limited, much more preliminary at the moment, and they will fit in the end in some way the LSRG or the greenhouse gas protocol. So if you understand the way to think about land emissions via the greenhouse gas protocol, I'm sure you will be able to do so too via the ISO. Before I go into the practical things about the LSRG, I want to start with one main principle that's important to understand, and it's the carbon cycle. So the carbon cycle, as we know him today, that's the fossil carbon cycle, as Kenneth was addressing. The fossil carbon cycle is basically the cycle that we are dealing with already in all our corporate carbon footprints before we started to think about land emissions and the land sector and removal guidance. What is particular about the fossil carbon cycle, in contrary with what I will later on explain about the biogenic carbon cycle, is that fossil carbon cycle is linear. There is a pool where carbon is stored. In this case, for example, geological pool, an example given as diesel. That diesel is burned. By burning that diesel, you have fossil CO2 emissions. You can capture a part of these fossil CO2 emissions to avoid your emissions or to lower your emissions, and these fossil CO2 emissions come into your atmosphere or atmospheric pool, and that's the determining factor of your climate change. What I pointed out here in red is that the removal or the reversal of your emission is not so much relevant or not so much applicable to your fossil carbon cycle as the time line where we are looking at to refill or to replenish the geological pool and to have again that same diesel is just way too long to be relevant for your carbon footprint. And that's basically the reason why you end up with a linear fossil carbon cycle. If we have a look at the biogenic carbon cycle, that is different because the time needed to replenish, to restore, or to refill these pools, whether it's a land pool, a product pool, it's just way shorter. And that makes that you can basically have a circular flow where you have the atmosphere with some CO2 molecules. You can do some removals, basically meaning you go from the atmospheric pool to a non-atmospheric pool with a certain sink. It can be a tree, and a tree grows, gives a certain carbon in your land. You make from that tree a wooden table. By having that wooden table, you change it, you transfer it to a different pool, a product pool, and then eventually that product pool could still be burned or used or degraded and causing emissions. And that flow can be circular, which basically is one of the fundamental principles, fundamental insights to understand why, which I will come later on, which is why the scope of the land sector is together with removals and why they basically have installed that whole framework of removals around that land sector. That's one of the main key takeaways I wanted to give you about the carbon cycle and the principle about it. If I need to give very practical a one-page summary of what is LSRG really about, of what implication would it have for you, then it's first of all, it will lead, it's unavoidable, I think, to more reporting. So instead of only reporting about non-land emissions, in the future, your companies or you will need to report also about land use emissions, land use change emissions, going from cutting forests, going from methane emissions from cows, as Kenneth was already addressing, but also, and secondly, and that's I think the one that refers the most also to that the slide I showed before with the circular aspect is that you also need to follow up your pools and the changes of your pools, as you will be able to report about removals. You will be able to prove that you're basically taking away CO2 from the atmosphere and putting it in a, let's say, safer haven for climate change in a certain pool, whether it's a land product and geological pool. You need to follow up on these pools over time. So you're not only accounting for your activities and your emissions, but you will also need to account for pools and the changes of these pools. Eventually, but don't be afraid already, that could lead to 23 new emission dimensions or accounting categories, how you want to explain it, next to your non-land emissions as you know it today. Of course, you will never need to report, or there's most likely that you will never need to report for the 23 new emission dimensions. So let's take it step by step. Another, just a general takeaway, if you need to report more, always take into account, if you want to go step by step, the land emissions accounting is obligatory, the removals are optional. So if you want to go step by step, first start with your emissions, then go to your removals. On the other end, what is also, and that's basically explaining why there are 23 new emission dimensions, what the LSRG is asking you is to report all of them separately. All of these different new land-related emissions and removals, report them separately from one to another. They will have the same structure as you know the structure today, whether it's related to a reporting period, an organizational unit, a scope, an activity, a greenhouse gas, a life cycle stage, or a reporting split. That doesn't change at all. That framework stays the same. The thing that changes is that you basically get a parallel new emission dimension. That's new about it. And that leads me to basically, if I go to the reporting, today, some of you, the ones that use the Greenhouse Gas protocol already elaborately will recognize this. These are the scopes, these are the activity categories with a certain amount of ton CO2 attached or allocated to that activity category. So that's one table, one overview, all of your in-scope emissions. Basically, by implementing the LSRG, that will lead to the split of a fossil-based table. Again, same structure, same scope, same activity categories, same greenhouse gases, but next to that, also tables that will cover your land-based emissions. So that's one of the key practical implications that I want to address already. Another one, as I said, apart from reporting more in one of your introductory slides, is that the biogenic emissions come into scope. And I want to give you an example to basically explain what is now really for a use case where there is a producer of corn. That corn, and I take it very simple, that corn is converted into a biogas, and that biogas is used by, for example, a user that drives a car on biogas. At this moment, the only emissions that are taken into account is, first, the producer of the biogas might have some emissions related to, for example, methane emissions, leakages, transmission and distribution emissions related to the production of that biogas. The user of the biogas needs to report in scope 3.3 related to the combustion of that biogas to these well-to-tank emissions, and needs to, and that's obligatory, and needs to account for in its scope 1. Let's say that the vehicle, he owns the vehicle, is it's optional to account for the biogenic CO2, but separately. That's basically very short what is a possible setting without the LSRG today. With the LSRG, and I'm taking it fully fledged for this example, not only will you have now these non-land emissions in the first row, it's still the same methane related, whether it's methane or biomethane. I explicitly did this. It doesn't matter. It's still, whether it's already today biomethane or methane, it still already needs to be accounted non-land in scope. But apart from that, now the real impact of LSRG starts. And that's where basically first, all of the land emissions related to the production of the maize are going, or the production of the corn are going through your full supply chain. And from land management, non-CO2, non-bio CO2 emissions going from the tractor you're using, the fertilizer you're using, and the associated nitrous dioxide emissions, your carbon stock changes, and then the change of, for example, previously there was a forest, it's cut, and now it's a cornfield or a corn agricultural field. And that goes along the way with the structure that I think that's a structure that we know that from a supplier's scope 1, we go all along scope 3.1 from the products we buy. Apart from that, and I think the second row is probably the most particular one. So still, the user of the biogas accounts for that biogenic emissions, but it's now really attached to an in-scope category, the product CO2 emissions, and the producer of the biogas, as it's a product pool, needs to account for the changes of that product pool. And so that means that from that ongoing linear one, now we have a possible circular one and a possible fully covered view on the emissions and possible removals of these biogenic flow. Another practical implication.
Steven, if I can add, sorry, add one thing on the previous slide, right? So, because you explained on the 23 new activity dimensions. So the things here in green, these are all land-based emissions, but you will see that the text in green is also always slightly different. These are a handful of the 23 activity categories, right? So we've put them in appendix. We will share them offline, exactly the details of the 23. But personally, I find them a bit confusing. So here you already get a feeling of the complexity of those 23 dimensions: land management, land change, and so on.
No.
Sorry to interrupt you, Steven.
No. It's a fair point. It was for us more important to first stress like better examples than indeed the fully fledged overview of what is all possible. I think that you will discover along the way with a very concrete example and very concrete use case. Another, and it got some votes. I was quite satisfied with seeing that in a poll. Is another practical implication. Of course, if you get new emission dimensions, you expect also that your emission factors will change or will be compliant also to that new framework. And we try to already assess in this preliminary state the status of the different emission factor data sets we have already in our tool or which we evaluated. And in very short, I think it's logic probably that there is at the moment not yet an emission factor dataset that is fully compliant with all different aspects of the LSRG. It will also probably be a sort of co-creation, chicken and egg story. We will need to, when it's not yet into play, the LSRG, will the emission factor datasets already have the data? But more importantly, I think we need to stress that there is already some data we can use. I think for us, the most at the moment, the two energy databases that we have, AIB and IEA, they don't really have they only have fossil emissions. They don't have anything about biogenics or land emissions. But apart from that, for example, the UK governor them have for biofuels already biogenic CO2 emissions that you could allocate to an in-scope category. Exio-based too for your spend-based emissions, of course, where relevant. And then on the fully left, EcoInvent and REP, they go even further, and they have also land emissions, sometimes land use, sometimes also land use change emission data, which can already be used to go and have your first LSRG compliant footprint. In below, we also evaluated two main or frequently addressed data sets related to land emissions, the agri-footprint and agri-balise. At the moment, we are not planning of taking them into our application for agriculture and food emission factor. We decided to go with the REP one. Main reason is that we think that the REP one is already very much in line with the LSRG, is already also in methodological in-depthness, very much aware of the complexity and compliance of the LSRG, and is a community-supported solution, whereas the agri-footprint is also highly compliant, but is a very much disproportionately expensive solution, in our opinion, to what they deliver. And the Agri-Balize has some emissions on land and land use change, but they're all in the same emission factors, so doing a split is much, much harder there than whereas a REP provides that split already. Just to give you a quick background, if you will see in the near future the REP dataset in our application where that decision comes from. If I can conclude, I think we should be positive about the fact that the LSRG is a guidance that pushes for an holistic and circular view, basically leaving no gaps behind in a full circular biogenic carbon cycle. Of course, the science is behind these land emissions and all these type of cycles, all these type of accounting categories is complex. The LSRG framework is complex, but, and it's, I think, most importantly to remember about the new accounting framework is that for most, it will lead to minimal extra input data. It's only when you're really going into the details of your carbon pool or carbon stock monitoring that it might lead to extra data monitoring. That most complexities should be managed by emission factor database or data set or data, just the providers of your emission factors, and also by tools like Carbon+Delete that implement that logic. We should cover the complexity. It should not be you using the again or accounting for very concrete. If you account for a liter of milk today, and you will account for a liter of milk in the future, you basically still just insert that liter of milk, and behind it there will be a full logic of a right emission factor being compliant with the LSRG, a tool that splits these emissions correctly. But for you as an accountant, it should not change dramatically. That's a bit the main takeaway. And I think better understanding the complexity, starting to do the first footprints, trying to be compliant as much as possible with the LSRG will probably cause an acceleration, more data availability, that it will be more and more accurate, more and more precise along the way. So it's of course a beginning. It's a complex issue with limited data available yet. We can already do much, and by just doing it along the way, it will probably get easier and more compliant and more complete. Okay, so far so good, I think, timing wise. So now I would like to give the floor to Sasha. I will
Thank
stop
you,
sharing.
Steven. Yes, I'll share my screen. And I will try to keep the timing. But to find the right slide. So I will indeed take 15 minutes to deep dive into the FLAG guidance from the Science Based Target Initiative, and then take some 5 minutes to go through a study case from Climate. There.
We made it difficult to write with a lot of animation, Sasha, so you need to click a lot, but you're almost there. Voilà, there you are.
Yes, indeed. Thanks. I will just start with some advantages that we can see today for companies to engage into the Science Based Target Initiative. First of all, it's an advantage for a company to have already some ambitious and credible targets related to climate change, because it helps anticipate the new regulations that are coming from Europe, for example, the CSRD and the CSDDD that will come in a few years. We can also see that for many companies worldwide having some targets, it's also help building reputation. It can bring new clients, and lastly, it can also increase or strengthen the investors' confidence. So, going now more into detail about the FLAG target guidance. So first of all, so it was a guidance released at the end of 2023. And to which companies it would be important for. That's companies that meet one of the two criteria. The first criteria, it's about the sector. So if a company is in one of the FLAG designated sector, it has to follow the FLAG target guidance. And these sectors are sectors related with forest and paper products, food production, food and beverage processing, food and staples retailing, and also tobacco, with the exemption for SMEs. So SMEs, according the definition of the CSRD, still have the possibility to follow the SMEs track from the initiative Science-Based Target, which is less complicated. So that's still a possibility. The second criteria is about the GHG emissions. So if a company in any other sector has more than 20% of its carbon footprint related to FLAG emissions, then it also has to follow this guidance. So that's important for companies in different sectors, for example, restaurants, in the value chain where there are some textiles, some construction materials, and also everything related with resource extraction, because it will bring land use change emissions, for example. Important to mention that that companies that already have science-based targets and that meet one of the criteria will need to set separate target for FLAG emissions when they recalculate their targets, and at least latest 6 months after the release of the final LSRG, so from the GHG protocol that Steven just explained. So it should be somewhere in mid-2025. Also important to mention here that companies with bioenergy emissions and removal that are in other sectors, for example, in the sector of transport, and that have already science-based targets, they don't have to set separate FLAG targets. So that's easier for that kind of companies. So now that we clarified which companies need to follow this guidance, what does it say? So as you understood, once you have FLAG targets, actually you have two separate targets. On one hand, you have your energy industry target. For everything that it's not related with FLAG, you follow the existing science-based target methodologies, and then you will have your FLAG targets for all emissions related to land, agriculture, and forestry. And for that, you will have to follow the FLAG guidance. And basically, you have two options to set your FLAG targets. The first option is called the FLAG sector pathway, which has to be taken by all actors that are on the demand side of the value chain, but also on the supply side for companies that have different FLAG emissions or varied FLAG emissions. That's the preferred option. The second option is called commodity intensity pathway. So that's a possibility for companies for which one of the following commodity is important in the carbon footprint. So if it amounts for more than 10%, then it's a possibility to follow that specific methodology for commodities. So there have been 11 commodities pathways that have been developed by Science-Based Target Initiative at a resolution of 26 regions. So that's important to take into account the fact that that deforestation and so on is not at all the same in the different continents, for example. So what does it mean exactly? If we look at near-term targets for 2030, The flag sector approach, so the generic approach for the flag sector, it's an absolute construction target, meaning that you have to reduce by 3%, 3.03% per year your flag emissions. If you compare it with the non-flag mixed sector pathway, which is 4.2% reduction per year, it's less ambitious. And for the commodities, if you have a look at the table here, we won't go into detail, but these are intensive targets, so they are expressed in ton of CO2 equivalent per ton of products. And about the long term, so 2050, we expect that the emissions in the agricultural sector would be reduced by 72%. That's coming from the net zero guidance from the Science Based Targets initiative. So here again, we can compare with the non-flag sector, which is expected to reduce by 90% the GHG by 2050. So again, we can see that it's less ambitious. And the reason behind is that it's very complicated to reduce specific emissions, for example, the methane, if you have some beef production, or N2O emissions that are also significant in agriculture. So it's even more complicated than decarbonizing energy industry and so on. So the first thing to do when you have to set a flag target, it's to account and report the emissions, the flag emissions. So you have to do it according to the GHG protocol land sector and removals guidance that Stephen just explained. And basically you have three families to report for the science-based target. The first one is land use change emissions, so all emissions related to deforestation or other ecosystems degradation. Then you have the land management, so emissions related to what happens at the farm, on the forest, and so on. So it included methane and so on. And then you have the carbon removals and storage, because you have good practices in agriculture or agroforestry, or enhancing soil organic carbon, for example, you can account for removals. So as I was saying, you have to calculate, to consolidate, and to report your flag emissions according to the LSRG. But with a focus on land emissions and removals, meaning that in the LSRG, you have different emissions and removals that are excluded here for the flag. So everything related to product or geological pools, so for example, the DAX and so on, is not part of the flag. Some important points to keep in mind when you have important flag emissions and you want to set targets. The first thing is to set near-term science-based targets for flag and non-flag. So typically 5 to 10 years after your base year. And the reduction targets need to be aligned with limiting warming to 1.5. The two options that I detailed before are aligned with this 1.5 degrees. The second point is that it's possible to valorize biogenic removals for your flag targets. So, for example, by improving forest management practices or deploying silvopasture, that kind of things, it's possible, but still the focus has to remain on the reduction efforts, and offset is excluded. So it's not possible to purchase carbon credits and to valorize it in the flag targets. Then it's not mandatory, but it's recommended to set also long-term flag targets. And for that, you have to refer to the net zero standards. Then also an important point, when you commit to science-based targets with a flag target, you also have to set a parallel target, which is the zero deforestation in your value chain. and that target must be set for no later than 2025, so basically tomorrow. And the last point is that it's really important to consider the flag and non-flag really separately. Don't cross the streams, meaning that you cannot valorize some biogenic removals to reach your non-flag targets. That's also very important. And if I still have 2 minutes, I can go through a study case. Yeah, thanks.
Yes, just go ahead. Go ahead. Take your time.
Thanks. So as I was saying earlier, at Climax, we supported different companies accounting for emissions and removals in retail sector, food production, and also wood. Here I will take the example of a company active in the production of cardboard. And the 3 points that I will detail is that the first thing is really important to map the different CO2 fluxes on the value chain, because then you know what data to collect, what emission factors to find, and how to consolidate your results. As it was said before, and also in the results of the survey at the beginning of the webinar, it's not always easy to find some emission factors. So here we had definitely this challenge to find the good emission factors that follow the standards, but are also aligned with the data that we could get from the suppliers of the company. In terms of methodology or scoping that were not exactly the same. So that's definitely still a challenge. And then it's also important because that kind of companies active in cardboard, they can act, they have levers to reduce the biogenic emissions and also to increase the biogenic removals. We will see that in 1 minute. So as I was saying, starting point is to map the different CO2 fluxes on the value chain. So the value chain here starts with the feedstock production with the starch and primary and secondary wood fibers. And it goes all the way to the end of life of the cardboard with incineration. So in terms of fluxes, we have 3 main fluxes: fossil emissions that were present at every stage of the value chain, then biogenic emissions and biogenic removals that we could see or expect at different stages. For example, we had to account for biogenic emissions when incinerating the cardboard at the end of its life. But we also saw huge carbon sequestration during the wood and starch growth that was needed as a feedstock in the value chain. In terms of result, it was the same for all companies. You have fossil emissions, but here in that specific case, you also have significant biogenic emissions, but also biogenic removal. So if we have a zoom on these two, for that company, it was possible to account for biogenic removals. So basically the carbon that was stored in the wood, and it was considered in the purchase goods and services emissions, so scope 3.1. We also could account for biogenic removals related to the external biofuel production. And at some point, this carbon that has been stored was put back in the atmosphere. First of all, for scope 1 emissions, we had the combustion of the external biofuel, but also the wood co-products on site. So it was scope 1. And also during the incineration, we had also biogenic emissions. We can see here that we have a gap. So removals exceeds actually biogenic emissions. The reasons behind is because of the recycling rate. Because we have a high recycling rate, actually we have more and more carbon stored in the products. We also see that some of the cardboard would be recycled into sanitary papers, for example, so enter a different value chain and going out of this value chain so that we don't have any biogenic emissions at the end of the life, because it has been it's out of the value chain. And also, as I was saying, it was complicated to have a perfect match between the emission factors that we use and data that we collected. So that's why we also have a gap. Just to conclude very quickly, of course, they can act on fossil emissions, but they can also act, they can improve biogenic carbon loop by increasing the recycling rate, respecting, of course, the minimal amount of primary fiber that needs to be injected for quality reasons. They can also act on the purchase of the wood, so they can purchase wood from more sustainably managed forests, using more resilient species, for example, making sure it's using the best labels and so on. And yeah, as I was saying, it's crucial to follow the databases to find the right emission factors to align with the standards and to the rest of the data that are used. And that's it for me.
Thanks a lot, Sasha and Steven. I think that has been very helpful also to me, and I think looking at the questions in the chat also to a lot of other people. And I see a lot of hands and love coming. That's very good. There were quite a bit of questions in the chat and the Q&A. Some of them have already been answered. We will not be able to answer them all in the remaining 8 minutes. So what we, as always, do is if the questions that have not yet been answered, we will get back to you one-on-one. There is maybe one thing that I do want to pick out, it's kind of recurring, is on emission factors, right? Everyone is struggling a bit with emission factors. So maybe a question to you, Sasha, which emission factors have you used? And if you cannot say that, just how do you look at emission factors? And a second question is, if emission factors become better, which means they might cover more of the land-based effects, it might be that FLAG emissions will go up just because people report more comprehensively. How should companies deal with that, also in the light of a science-based target?
Thanks for the question. It's indeed key. So basically, the databases that we use are pretty much the one that Steven explained, and we have case per case. We look at EcoInvent, AgriBalise, Exeobase, and so on to find the right emission factors, knowing that it's always complicated to have the perfect split among the land use, the land management, and so on. So yeah, definitely we need to be able to follow the evolutions, and each time to go through the different databases. And then on the question related to the evolution, and do we expect then the emission factors to increase because it will take into account more emissions? That's a possibility for land use change, for example, or for land management. But it's also possible that it will decrease, actually, because it will take into account more the removals. For the moment, the removals is really complicated to take into account. So that's sometimes just out. So that's possible that in the future, more and more actors, really practical actors, would have better methodologies and better tools, and would be more equipped to monitor for carbon removals. So that could be also taken into account in the emission factor. So that would be a positive effect, and that would help actually companies to reach the FLAG targets.
Thanks a lot. Steven, you wanted to add?
No, I just wanted to confirm that I agree. Sasha was saying.
Then maybe in the interest of time, I propose we wrap it up here. I just want to share maybe a final reflection on my side, right? So diving into the details as we did today, you encounter a lot of complexity, right? Which can be a bit scary. But at the same time, I'm also rather optimistic, because I think it's a very good thing that we as a climate science community start addressing this topic. And with tools like Carbon+Alt+Delete and with good emission factor databases, right? So these are two big ifs. For a majority of companies, they will barely notice it, right? They will just have some additional tables in their emission reports. But if you buy milk and you use the right emission factors through a platform like ours, it will automatically account for your land-based emissions in your scope 3 without needing more input data. Yes, there are a lot of questions on where those emission factors come from, but that basically also goes in general for scope 3 emission factors, right? Also, the fossil content of milk is based on a lot of assumptions. So overall, a lot of details, but I think in practice, if the tools catch up, if the emission factors catch up, I'm rather optimistic that it will work and that we can all together reduce those emissions. And then the final thing I want to say, Sasha, are you still sharing your screen? Could you go 2 slides further? I want to make you aware of the next webinar that we organize. So we organize 5 webinars a year, always on carbon-related content. There were some AI bots joining this meeting in the beginning, right? So like everyone, we're also looking into AI. And we have been working on 2 concrete use cases where we really believe large language models and AI can help people doing carbon accounting calculations. So we'll dive into that towards the end of November. So you can already scan the link, or I'll put the link to register in the chat. And then final thing on the next slide, Sasha, sorry to use you as a clicker now. We know that, as you've seen in the chat, we all struggle a bit with the same challenges. So what we have done, we have also created basically an open community, an open forum where you can put your questions, maybe take the time to answer some questions of others, because as you've seen, we're all looking for the best emission factor for milk or for peas or you name it. So this is kind of a free, open continuation of that. So if you're not yet following that, I would invite you to do so. With that, I'm happy to stop here so that we can stop in time. We will share over the coming days the presentation, the recordings, also with the contact details of Sasha and Steven, so that you can reach out to them for follow-up discussions. And for the questions that have not yet been addressed, my apologies, but as said, we will come back to you on that.
Yeah, we will attach it. I answered it already to one question that we will attach it to the debrief. So everybody has an overview of the questions and the answers.
Perfect. Very good. Thanks a lot, Sasha, for joining. Thanks a lot, Steven, for preparing. Thanks a lot, everyone, for joining. All the best of luck making this FLAG and LRG happen in practice, and enjoy the rest of your day. Thank you.
Thank you very much.
Thank you very much. Bye-bye.